Good to go.
All right. Hey guys. So today is, what is it? May 16th. Coming off of about 2 weeks of a nice parabolic move in Bitcoin. And as I talked about in kind of the watch list and the trade alerts that we've been sending out, we've been expecting that capital flow. Once people start to take profit in Bitcoin, part of that profit taking usually spills over into other altcoins, right? And the reason why is when people sell Bitcoin, you really have three options, three main options, I should say. You can sell Bitcoin for an altcoin, right? Like Ethereum or whatever. You could sell it for fiat, right? Where you go to an exchange, you actually sell it and get fiat capital like euros or US dollars or whatever. Or you could sell it for a stable coin, like the much beloved Tethers or any one of the others that have popped up over the past couple of years. So whenever we start to see selling or after a big move and we start to get a little bit of a pullback, I like to anticipate that and look at coins that have potential to go to the upside as well. So that's why I started to scale in here a little below 200. And then as we were talking about in live chat, added a little bit on the 1, 2, 3, 4 breakout here. And you can see from the breakout, we've gone, see, about 40%. So by no means a small move. And you can see kind of the first area here, prior support turned resistance, which is also kind of around emotional level, around 250. And so the trade alert that I sent out last night, I think it was 265 is where I was getting some fills. If we go down, yeah, I think it was somewhere up in here, started to scale out. I think it was close to about 10% of the position. So I'm actually still holding a majority of that, but it's just my style. And Rocky kind of mentioned this in the post that he had yesterday about choosing the middle path, right? Where, you could be all in or all out, but by scaling out and closing part of the position, it does a few things. Number one, most obviously, it allows you to take some profit, right? But number two, it gives you a chance to reevaluate risk and adjust risk, right? So if you guys looked at the risk to reward profile that I set up on this trade, we know that the pivot low based on, our technical breakout and where we typically look to place stops was back here around 150. So that was also kind of around emotional price level. It was where there was a lot of trading action over the past few months. So what I like to do is after we make a higher pivot high, as you can see, once we broke out above the 190 or 200 zone, I like to adjust risk. So I did have a hard stop down here behind this price level. And then once I start to take profit, this is just kind of I'm just kind of talking through, I guess, the way that I typically manage orders is, I'll set some limits and or actively trade the inside bid and ask, right? Just looking at order flow and trying to get good fills. Or sometimes if I don't want to think about it and I'm lazy and I don't care about paying for a little slippage, I'll just market order if I'm not trading massive size. But on the risk management side, so again, there's three things that scaling out does for you. It allows you to take profit, number one. Number two, it allows you to reduce or eliminate risk, right? So like, let's just say in this case, let's say that you had an average entry, just using a round number, on the break of resistance here at 190 even, right? And so what you could do, I'm not saying you should do this, but this is typically what I look to do after a breakout actually starts to work, is eventually eliminate that risk. And what that means is you would pull either your mental or your hard stop above 190. Now, typically what I like to do, though, is I like to wait for a higher low before that happens, because a lot of times we can actually get a pullback to retest the breakout level. And the worst thing that could happen, or I guess not the worst thing, but something that could be frustrating is, you pull your stop somewhere up here and then it tags your stop, takes you out, and then keeps going. right? I'm sure that's happened to some people. So what I like to do is after we put in a higher low, and that could be as low as, 190 or 200, or it could be, let's drill down to the 100%. It could be a sweet spot Fibonacci retracement. So if we look at that pivot run, anywhere in between, 250 to 220, right? But once we get that pivot low and then we break a new high, that's where I'll typically adjust that risk, right? So again, number one, allows you to take profit. Number two, allows you to reduce or eliminate risk and what I mean by that is by eliminating risk, you pull your stop above your entry. So like sometimes this will happen where I'll take a little bit of profit anywhere from 10% to 80%, right? Like I'll close 10% to 80% of the position, and then the market will come back and take my stop at break even or somewhere close to that, right? That happens not infrequently. So that's just why I like to kind of scale out. And then the third thing is obviously it leaves you open for more profit, right? So instead of trying to pick an exact top by scaling out, and you guys saw this like on my Bitcoin trade, if you look back, in hindsight, you woulda, coulda, shoulda held the entire position for 8K, right? But hindsight is always 2020. My goal in trading is not to pick the exact low and then get out at the exact high on the full position. If you try to do that, you might get lucky 5, maybe 10% of the time. You might get lucky, but it's going to cause a ton of frustration. And by trying to be perfect, it's going to drive you crazy. I've never in the past 15 years met a trader that can go all in, all out with full size and pick almost exact bottoms or almost exact tops, except on Twitter. There's a lot of people that post charts on Twitter that seem like they do that. But the reality is that real traders trading real size don't do that. So anyway, so that's why I scaled out here. Again, I was taking profit as low as like in the 5K range and as high as up here in the sevens, right? And I still have a runner going on this, right? So that's kind of my mentality on this Ethereum trade too, is we hit the first area, took a little bit off the table, but if we look at Ethereum volume, you can actually see that it's kind of increasing here. So you can see the average is on its way up, but you can also see the past, 4 or 5 trading days, it's been increasing in volume every day. Now that's not saying that we're just going to continue to have nonstop green days. We could absolutely get pullbacks or consolidation or bull flags or ascending wedges or price patterns that take anywhere from 1 day to 2 months to develop, right? So we don't want to place like our own time restrictions on it. But I do anticipate, until the market shows me something differently, I do anticipate higher prices. Unless we get a surprise VTOP, which is always a possibility, even though it's not the most probable outcome, that could happen. And that's why we use risk management, right? So with that said, I'm looking for this breakout trade, for this setup to remain intact. I would expect kind of the 180, 190 zone through here to hold up. So if we get a pullback, say we do something like this where we pull back to 200, I'm not going to be freaking out. If it VTOPs and then we just break down below, I'll cut off the rest of the trade as close to a break even, plus or minus a little bit. And then, that's just, it is what it is. That's what we got out of it. But because we have increasing volume, because Bitcoin is still kind of holding up, I'm trying to be patient and see if we can get follow through to the next level. Right. And by the way, this is also a measured move of kind of this ascending wedge pattern. So that's why we're getting a little bit of a slowdown inside of this range. But again, I don't have any technical reasons telling me to sell yet. So therefore, I'm holding a big chunk of the position. Going down to XTZ. So yesterday had a really nice breakout here, both on Kraken and Bitfinex. If you look at the volume, though, Bitfinex is kind of weird. kind of like falling volume here. The highest volume was, yeah, actually it wasn't even anywhere close to here. But if you look at Kraken's volume, you can see the average is kind of increasing. And over the past 4 or 5 days, we've had some pretty significant volume and just really steady volume. And again, like we mentioned, these coins that are super, super early, the volume can come and go, right? It's not like Ethereum or Bitcoin that trades billions of dollars every day. You know, some days like I would call this like a mid cap, right? Like it's in the top 20, but it's not the top 3 or 5. Kind of a mid cap coin like this, you're going to see trading volume on the low side as low as a few $1,000,000, on the high side as high as maybe 50 or 100 million bucks, right? Just in general. I'm not saying XTZ specifically, but just kind of across the board, that's what you'll see. And so whenever we see just kind of steady, consistent volume or slightly increasing, that's what I like to see. And then if we drill down, you can see kind of what happened overnight was price got a little overextended here. And so and this is very typical, when you get a breakthrough of multi-week or multi-month resistance, which was also the emotional price level of 150, you typically get a fast move from that. And like we talked about on Monday, I gave the reasons why that happens, kind of, the people reasons behind that. And so you can see today, definitely a reversal candle. And now the question is okay, what is this reversal candle going to do? Is this going to actually give us a peak and then a deeper pullback? Is it just a temporary pause in the market and then we're going to catch bids and then the next day is going to look like a continuation green bar, right? So for me, I'm not overthinking this. As we've mentioned many times over the past several weeks and months, this is a longer term play. The first area that I would probably look to take my cost basis out would be in the high 2s to low 3s, somewhere up here. Just because that would be a measured move of this multi-month channel, right? So you can see we had support down here around 40 cents, resistance around $1.50. So if we just measure that and then stack it on top, that's kind of the first zone that I would expect to see some resistance if it keeps going. Now, Bitfinex, you can see, has a little bit of a different story because it has slightly more trading volume and just a different kind of picture early on. And again, that whenever you're trading these like early coins, it's a little bit challenging because you don't have a whole lot of price history to go off of, right? The earlier the coin, the less the TA, the less I actually give weight to the TA. But you can see here at 180, there's absolutely prior resistance, which is why we're getting some selling here. But if we get a snap through that, this is where I really think we could start to see those daily range candles start to increase prior to relative price action, right? And a couple weeks ago, we did a really deep lesson on this, talking about how price action and the range, both on a percentage and a real dollar value term, those start to increase as the trend develops, right? It was like Ethereum in the early days, we thought, moves from $1.50 to 15 were huge, but in hindsight, you look at that, and then whenever we were getting those $100 plus daily candles when we were up over $1,000, right? That dwarfs anything that happened prior to that. And that's where log charts can be helpful. But again, they can also be deceiving in a way. So that's what I'm looking for. Guys, just still kind of holding this. There's no reversal pattern here. I mean, we have one kind of red potential reversal candle. But aside from that, volume looking good. As far as I know, on the fundamental side, I haven't heard anything that is particularly scary or changes our fundamental hypothesis about this. So that's pretty much it, guys. I mean, it's really great to see some bullishness coming back into the markets. Again, just kind of recapping what we talked about last week. For me, whenever we shook off the Binance hack, when price barely reacted to that, that was a sign that we had a parabolic move coming. Initially down here, you know, kind of our hypothesis was, well, 6K is a major multi-month resistance area. And I think it was back here, the story was, well, it's lower probability that we're going to just break through that. But one thing that we notice is whenever there's bearish or black swan events that come out or news that hits and the market barely reacts to that and doesn't change the price structure, that's a very, very strong sign. Like if you look back at 2016, there were several cases of that where, you know, when Bitfinex got hacked, we had a panic, but it rebounded right away, right? There were several things that happened in 2016, and the market just kind of shook them off and was like, oh, well, we're going to keep trucking higher. Where conversely to that is in 2014, during the bear market of 2014, every time there was some bearish news, like when Charlie Shrem got arrested, I remember that. There were like half a dozen things, bearish black swan news events that actually correlated with 1, 2, 3, 4 breakdown patterns that were actually great shorting opportunities. So that's why I like to, you know, just go with the strength of the market and let the overall market movement do the heavy lifting for me, right? So that's kind of what I'm looking at. Again, watching this kind of 8K level, we're up basically 100% in the past month. From the lows here around, you know, 3,500 or so. We basically doubled. With that, I would longer term, and you guys can see the charts where I map this out, but longer term, I would actually prefer to see a pullback here. And if we can now turn 6K back into support or do some kind of, you know, ascending wedge or a bull flag or some kind of pattern to where we get another bullish setup, I would take that. But right now there is a lot of downside risk. And so I'm definitely not like piling into a long here, just kind of holding that runner and waiting from there. So, so that's what I got, guys. I hope that's helpful. I'm going to go ahead and pass it over to you, Rocky, and you can go through your trades and setups and everything you see.
All right. Sounds good, Chris.
Thanks, guys.
All right. Can everyone see my screen? All right. So one thing just to add is if you look at the total volume on Tezos, so I've been watching it every day since it got listed on Bitfinex. It has been growing, and the volume on Kraken has been growing as well. We're seeing all the pairs on Kraken now pushing over $1 million, or not all the pairs, but most of the pairs, the major ones anyways. And I remember, you know, just, you know, several weeks ago or even a few months ago, it was like just a couple 100,000 a pop or 100,000 a pop or whatnot. So, so there is a steady increase on volume, overall global volume. Also, Huobi's had an increase in volume and so on and so forth. So yesterday, I think it was at like 13 million on the breakout. And I remember when it first got listed and first started trading, it was pretty much pushing, I think, 1 million at the, you know, on Bitfinex and whatever other exchanges it was on. So also something I want to point out is HIT BTC. Like when we talk about, you know, sometimes there's a debate about as to whether or not we can count HIT BTC price action or not. I mean, you can symbolically count it as, you know, how a chart, many typical charts would look. But up until it was actually listed, none of this was real supply. There's no real supply or demand, right? This is just a pre-market. You could, I guess, call these pre-market futures, only unique to this exchange. You couldn't withdraw, you couldn't deposit. So that's not true price discovery if you're not having real supply and demand. So in my opinion, price discovery started with Bitfinex. right? So you can cut out this huge stupid candle right here that you always get. You can cut that out, and pretty much, you know, we're kind of coming into all-time high resistance up here, right? This is all-time high resistance. So naturally, we're hitting some resistance. Things will start to get very interesting if we break this anytime soon. Wouldn't surprise me to see some consolidation here. You know, as you can see on any leg up, right? You'll hit a resistance point. It'll chop around, have a pullback. It'll chop around. Usually just requires being patient. Same here. Can get fairly choppy. So this is all-time high resistance. We cut out this candle. This candle is a piece of dog crap right here. So don't count this. You basically started from here. So this is all-time high resistance. Now, notice something interesting. This candle right here, we're starting to see the candle sizes grow. So just like Chris mentioned, and similar to the lessons that we shared a few weeks ago on how, as a trend develops, a bull trend develops, the one-day candle sizes get bigger. So this is the largest 1D candle thus far that Tezos has seen, not percentage-wise, because percentage-wise is relative, but dollar-wise, right? As far as size is concerned, right? Compared to any one of these, compared to this one over here, it's almost like twice the size. And so that's an interesting sign, because typically what'll happen is if it breaks the all-time high resistance, then you're in your new price discovery mode. You're in uncharted territory. From that point forward, the candle sizes will probably start getting a lot larger. Things can certainly accelerate at that point. We've got to break this area first. So, and obviously, you know, Bitcoin still has some kind of influence over the markets as well, so on and so forth. So, you know, generally speaking, requires patience. Another interesting tidbit of information is thus far, I think, if I'm not mistaken, except for maybe like a few coins, maybe BNB surpasses, but I believe Tezos right now is one of the best performing cryptos of 2019. So from the bottom to the top, it's made a 486% gain. That's outperformed Bitcoin. That's outperformed Ethereum. That's outperformed a lot of Ripple, a lot of stuff. It has outperformed most altcoins. I think BNB might have surpassed this. So let's just check. Let's just check from the lows here. Yeah, this one surpassed it. So let's look at this, right? Notice how the candles are starting to get bigger, right? So see this size of this candle? It's bigger than the large candles here, bigger than these ones, bigger than these ones, right? As the bull trend matures, the candles get bigger, right? So just to go back, to give you an example, and generally, you know, you have to, nothing is etched in stone, right? In trading, I just kind of consider myself a tour guide, right? I kind of read market behavior as I go along. Sometimes I'm right, sometimes I'm wrong. I think I get a general sense on how the market behaves. So, you know, a lot of time I can kind of figure out what's going on. Doesn't mean that I'm gonna get it absolute perfectly. And then it also have to leave some room for adaptation, right? So like, you know, Tezos would be like, let's say maybe like down here or whatever. And if it breaks, you go into new price discovery mode. Now I could say, okay, well, I have this target at $10, $50, whatever, whatever your targets are. You could have these general targets in your mind, but you also have to adapt, right? It's not etched in stone. Just because I created a target off the top of my head where I'd like to take profit doesn't mean the market's going to deliver that on a silver platter. Doesn't mean that there's not going to be some variations of that. And so you have to combine your general targets with the market behavior and what the heck is going on in the market, right? So like one sign of a market starting to top out and getting to a point of exhaustion is where the 1D candles start to get way too big. They start to get really excessive, right? So you notice here, they just start growing, right? All here that the 1D candles are very small. And then you break out of the range. And look at this first candle as you break out of the range. It's larger than all these other candles. Just this first one here. And the second one's larger than that. Then it tops out with a candle that's larger than all the rest. So at the time, at that moment in time, this is a record-breaking candle. Had a big retrace, big throwback, yin yang, then back up, and then boom, right as you get close to the top again, you get another 1D candle that's even bigger than the last one. It just took out the last one. It's like twice the size. So this candle starts growing, get a little reversal candle, and then throw back, nice market structure, retests, prior resistance to support, you know, right here, retest, generally, right? Prior resistance to support, has a nice little bounce, suddenly starts to break out. Now the candle's getting even bigger. And you're like, okay, crap, this bull, just, you know, and when you see these massive candles, it's like the moment where the market looks like it's going to take over the world, like it's the most bullish thing since freaking sliced bread, right? That's generally when you're going to hit the reversal, right? That's, you know, peak of max euphoria, max stupidity, max everything, right? And so, you know, you look at the size of this candle right here, and it's just, you know, basically, we've talked about the scale. That one candle was pretty much like all of this and all of these first two moves combined in one candle, right? Now, it's all scale, it's all relative. Had this market had broken out of the all-time highs, the 1D candles would have gotten even bigger. So if it didn't top out, so, you know, it's, you could still use it as a general rule, but you also have to take account that it's all scale too. So if it did manage to break out of this, then I bet you the next 1D candle would have been, you know, this size. It would have gone up even more, right? It'd get even more ridiculous. So we've seen this, right? Just go back to some charts of 2017, play around, make some lines, compare candles, back test this stuff. Look at Ethereum, look at Ripple, look at all these charts. I bet you, and remember I showed you a quick little lesson on bearish divergence. I bet you there might be some here if I were to insert an indicator. I haven't looked at this. We'll see. Maybe I'm wrong. But let me see. Boom, bearish divergence. Oh, it's a miracle. How did I know? How did I know? It's a miracle. Look at that. Right? Simple. So what happened? You had a big correct, you had massive candles. So step one, that you're hitting a reversal is, and you know, I'm talking about reversals because I want folks to kind of think a couple steps ahead like a chess player. So you're not, you know, swinging a bat at a piñata with a blindfold on, right? So you kind of have an idea what to look for when we start to get into a local reversal territory. Yeah, that's a good point. Harry's pointing out that there was some bearish divergence here. So this is a very valid point. And like I said, with anything, is that one indicator and one thing to look for alone is not necessarily going to be the thing that's going to confirm a reversal, right? So you have to combine that with price structure, right? You have to combine it with price structure. So even though there is bearish divergence here, and it's still kind of like an early warning that things might be getting a little bit exhausted, if you look at the general price structure, right, the throwbacks were very clean, right? It wasn't showing reversals, even though the size of the candle is getting bigger with bearish divergence. You know, it was bouncing off of prior resistance turn support. And to me, like this just looks like healthy retracements to me. So if I were to take out the RSI and just kind of look at this, then this would look like a healthy retracement to me, right? Also, if you were to let's say, take a fib and measure where the dip was. It lines up with, you know, 0.5 to 0.618. It's quite normal. Sometimes with less liquid markets and crypto, it'll even go to 0.78 as a retrace. But here where you get these massive candles in our push, so if I were to look at this on the bleeding edge and I saw us break out these massive candles, I'd say, okay, we started some divergence, but we pushed up. So far it looked healthy. Just starting to look a little less healthier. Bigger correction, where did it dip to? Probably still dipped to a reasonable area, you know, 0.618. So it could have easily consolidated here, pushed up a little bit, start to top out, and then you gotta kind of look at, from this point, you gotta kind of look at what's falling soon. It didn't have much of a dead cat from that point. So this to me would definitely be you know, a take profit signal. And sometimes you take profit in the high, and then sometimes the market breaks down and you have to close the rest a little lower because maybe you might be a little bit trying to be patient, seeing if we'll make another push up. Another thing you could do to get a different perspective, you can put on the Hikinashi, right? Oops. So you'll notice that these corrections here, now these corrections don't even look so bad, right? Because what the Hikinashi is doing is it's just taking the average price action. It's not necessarily, each candle is not necessarily giving you the open, close, high, low. It's giving you the average price. So you can see, even though we've got these little red correction candles, the predominant color here is green. And even up until here, then it starts to roll over and you get to red. Like once you get, like, you know, definitely a big sign of reversal. Obviously, if you miss it and it drops, huge sign of reversal if you didn't take profit up in here is when you get a massive candle that does a, you know, big retrace. The red candle gets big. Then you get what I call a second chance dead cat. You know, might not necessarily go all the way back up, but a second chance dead cat's kind of like, all right, you have an opportunity to at least close out some of your trade on a dead cat. And this one didn't even quite make it up to 0.618, which would have been a typical area where I like to close on a dead cat. It didn't quite make it up there. So you got to adapt. You know, you could have general rules as a guide, but none of this is etched in stone, right? So the thing that people have the hardest time with in trading, and maybe in particular trading crypto markets, because there can be a lot of subtle nuances with correlation and, you know, different charts that you're looking at alt BTC, alt USD, so on and so forth. There can be a lot of nuances in the market. So it's really a balance between having trading rules to manage risk based on experience and identifying market behavior, and then also being a little bit adaptable based on what you're seeing in that moment, and trying to do all of this while managing emotions and being able to differentiate, you know, your emotional pull towards something versus, you know, sticking to your plan or rules. And, you know, that's all just stuff that comes with experience. So that's a quick look at BNB just as an example. I digress, but I still, so aside from BNB, I don't know if other markets gained quite as much as Tezos this year. No, I already looked at that. Sorry, I want to look at Ripple. Just want to look at some cross comparison on some other. I don't think this went up nearly as high. Let's see, from there to there. Nope, this one's underperformed. This Ripple's underperformed. Everyone's hooping and hollering about Ripple. But you know, if you were in Ripple at all this year, you've underperformed compared to any of the other markets, right? And again, the thing is that doesn't necessarily mean that's going to stay the case. It doesn't necessarily mean it's going to stay static that way. Sometimes if you're looking to cycle profits, sometimes if you're looking to catch something, park some money in something that hasn't gone nuts, often what I'll do is I'll look for markets that have underperformed because they may be due, the probability might be in favor of them being due for some counterforce, right? So what would counterforce be on this? We've had inertia, so the counterforce to inertia is momentum, right? So counterforce is basically just a transition between inertia and momentum and directional changes, right? So you have counterforce up, down, and counterforce between inertia and momentum, right? So here you had some counterforce on the inertia, which is flat. We've got a little bit of momentum, a little bit of a pop there. But that said, so it's not like one could just buy any old crypto and performed with the same performance, right? So some crypto underperformed others. Let's just do a quick round and see the performances of some of the other coins, just to kind of make note of things. So I'm just measuring things from like the December bottom. Okay, this one kind of came up similar to Tezos. So this one was a fairly good performing. Litecoin I know had a good tear as well. Yeah, I'll jump onto Bitcoin. Litecoin had a good tear as well. Tezos outperformed Litecoin. It kind of started the trend a little bit, but it outperformed it. Let's look at Cardano, see if Tezos outperformed it. Yeah, it outperformed Cardano. Anyways, just out of curiosity, I'm going to look at BSV. Just for my own morbid curiosity. Oh, this one got delisted. Oh, this one's dead. I'm just joking. All right. Okay, so this one, if you measured it from December, which is the low, yeah, it's at currently 64. So definitely, it had a little bit more of a moment in its earlier day when, you know, they're having their little well games happening, but this has been underperforming, probably worse than anything else. So, but the good news is it's in alignment with the true vision of Satoshi, apparently. All right. So, anyways, so on and so forth. Blah blah blah. Now, Bitcoin. Let's go back to the Honey Badger. Honey Badger. I use Bitstamp now instead of Bitfinex because it's got more data. And all right, so Bitcoin has done well, performing, and there's one subtle nuance that it still seems like a lot of crypto traders haven't picked up, because a lot of crypto, you know, a lot of old school crypto traders, a lot of crypto traders, they're really fixated on the one-dimensional, like you only trade on the Bitcoin charts. And then you might have others who might argue, oh, you can trend USD. I suggest, you know, it's got to be multidimensional. You have to look at both. You have to look at both, and not just look at both. You have to actually understand what the hell is happening in the market dynamics between both charts, psychologically and on a technical level, what's happening. So in my opinion, from what I observe happens, is that Bitcoin makes a move. Everything dumps. It's all correlated to Bitcoin, right? In a bull trend, Bitcoin makes a move. It pops up a little bit, and then alts go nuts and they explode. You have a little mini alt season where alts will gain over Bitcoin because they're more volatile, right? They are more volatile. Then what happens is, you know, they go for some really strong runs, and then Bitcoin has to play catch up a little bit. It happens in every bull trend. Bitcoin has to play catch up. Altcoins will have a good run and gain over it. And in order for Bitcoin to play catch up, the other coins have to start losing and topping out on the BTC charts while staying stable on the USD charts. So people mistakenly look at that and say, oh, altcoins are bearish again. Well, no, they're stabilizing on the USD charts while Bitcoin plays catch up. I mean, look, Tezos went up 400 and what, 50% or 30% or whatever it was. Bitcoin went up 167%. Someone could, point the finger at Tezos and be like, oh, look, it lost against Bitcoin on the last drop or whatever. No, Bitcoin was playing catch up. What happens? Bitcoin plays catch up. It hits resistance at a next level after going nuts and the show being all about Bitcoin. It hits resistance and cools off a little bit. Then altcoins make another wave up. Usually that wave up corresponds with altcoins on the BTC charts hitting major structural support zones for a bounce play on the BTC charts. When Bitcoin cools off, altcoins bounce on the BTC charts. That leads to breakouts in the all-time highs. This is something that I discussed over a week ago in a watch list and something to look for. I showed some examples. I pulled up Ethereum, Tron, and Ripple. Those weren't endorsements for those coins. I was just showing you major large cap coins that were testing support and that I said would have a high probability of bouncing off of that support zone, therefore breaking new USD highs as a result of the Bitcoin price being higher, right? So psychologically, there's something else that happens behind the scenes. Bitcoin goes on a tear, and people who missed out on the Bitcoin run will look for profits elsewhere. And other people who made profit on the Bitcoin run will look to compound their profits by taking their expensive Bitcoins and throwing them in at support, right, before the bounce to help compound and grow more Bitcoin until, if they're smart, it gets to the point where Bitcoin tops out and then they go back into USD. But we're in a bull trend, so one could certainly pull out hard profit and hedge in USD and all that kind of stuff, but it doesn't have the same gravity it did, when we went parabolic at the start of the bear trend, the end of the bull, start of the bear, when things were going parabolic. At that point, that was very, very important to go into USD, right? The reason why it's important is because it's the difference between a quick price correction of 30 to 40% with a bounce and some consolidation and another push up versus, an 80+% drop in the entire markets and a grind for over a year, right? So, but you also still always have to be mindful of the taxable events, because a lot of places crypto to crypto trading could also be taxable. So this is generally what's happening. And if you look at these altcoin, I'll get to questions at near the end. If you look at the alt BTC charts, it's still kind of showing a sideways accumulation pattern on the alt BTC charts. If it breaks out of the range on the alt BTC charts, and when you start to see candle sizes on the alt BTC charts getting bigger, going parabolic, that's where the real fun begins. Now, are we going to do that on this run, this bull run, or are we going to chop around some more? We don't know. Time will tell. It'll be something I'll look for, that I'll certainly look for. So, going back to Bitcoin, let's do some Bitcoin analysis. All right, so going back to Bitcoin, I posted a watch list. It's just some major resistance we're hitting right here, right? You can kind of see it's curved into parabola, right up into major resistance. Market sentiment was extremely euphoric before the drop yesterday. And then today I saw my Twitter feed and I start to see some 1K charts again on this drop. So even though this is an area that I'm watching very, very closely as a possible, I basically, and obviously anything's possible, right? I won't discount anything, but some people are saying, oh, maybe this is a dead cat and it'll go down to like down there. And that, maybe that's possible. Anything's possible, right? I won't discount that. In my opinion, this looks like a bull trend to me. You know, we've changed the market structure. We've tagged a higher resistance point. You know, if we would have topped out a prior support turn resistance, one could make an argument that maybe we'd still be in a technical bear trend. When I first saw, I really like identifying early trend reversals. So when we first popped here, I'd marked that in my books as like the first higher high. But technically, one could make an argument that that's not valid. So this isn't like, none of this is like hard rules etched in stone, but one could say that this right here is just a stretched out version of this, and that this pop up would have been similar to that. So this would be, in my opinion, like the first major higher high. You know, it came above this came above this, and now you've got two equal highs here. We've obviously been making higher lows. So if this were to be real bullish, in my opinion, even though I'm watching the AK level, I said, okay, you know, this could definitely be a level where we top out. There's some major resistance here. There's something to that, right? I posted it before we started to have a little mini retracement, right? To me, there's a difference between like a retracement consolidation and an actual like correction, right? So I'll give you an example. Right, like these little red candles along the way on the bull trend. These are, you know, some retracements along the way. Whereas this is a correction, right? This is you know, a little pullback and it keeps going up. This is okay. We're taking a nice long pause. You're going to reevaluate your love for Bitcoin. You know, we'll give the crypto traders existential crisis to think about. We're going to give them a nice 38% correction. This is a correction. This is a correction. So they typically range between 30 to 40%, right? So when we were up here and we dropped 43%, I said, oh, folks, this is the first time we've dropped that low. This is more than a correction after a parabolic advance. That's a sign of a reversal, right? So let's just entertain that. If we were to have a correction at this resistance point between 30 to 40% for a nice clean retest of prior supports, that would make it, you know, 30%. We'd retest this area. And if we wanted to, you know, maybe do some stop order hunting and cause a little bit more pain and fear, it could even go as low as, you know, the 5K area. That said, I'm not entirely convinced this thing wants to stop, even though we're taking a pause. We're taking a pause at a major resistance, but you know, it doesn't happen instantly. Like, you know, it's not like it's gonna hit resistance and then sometimes it'll hit resistance. You'll just see a big dump. Usually that happens in all coins. With Bitcoin, it can take a little longer. So it hits some resistance. Sometimes it can chop around here a little bit before. Like, look how long it chopped around here before it dropped, right? How many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, like 2 weeks of chopping around at resistance before it dropped down. So it can take a while. But that, if it did that, if it chopped around at resistance and then dropped, what I would anticipate happening is during that consolidation period, altcoins pushing up higher. And then if they get a little bit too parabolic, then suddenly, if it chopped around for the next week or so and then dropped after alts push up into their next resistance level, then I would anticipate all the markets having a big correction correlated with Bitcoin, right? The other scenario here is that everyone's looking at this, right? Anybody can draw a horizontal line. Grab your favorite friggin' crayons. Any kid can draw a horizontal line, right? So people could be looking at the same thing. Just like this whole prior, support turn resistance. When I said I think it was a crowded trade because many people thought it was going to top out here, and I questioned it. I was like, it seems fairly crowded. A lot of people expecting a drop. Maybe we push up. Maybe we break for another move. If we did, 10K is the next most logical place. In my opinion, if we broke this, we would probably do it in a day or two. It could even just be one daily candle right there that would do it, bring us up to 10K. Then I said if we did that, I would entertain the possibility of a short. And that's not etched in stone. When I say I'll entertain the possibility of the short, I didn't stack a short, limit, sell, order. It means I'm going to look at the market and I'm going to use my brain and I'm going to assess if it looks like it's going to reverse. I might even, if we're at that key 10K level, I might actually, get down to the smaller time frames and watch the market and kind of wait for it to look like it's breaking down and then pull the trigger, right? Just to see if I can squeeze a little bit of money. Because what I'm not doing is I'm not selling any Bitcoin. So I'm not going to be selling Bitcoin to take profit. I'm not, a lot of alts I'm not going to be selling until they hit higher price targets, right? So, shorting on BitMEX could be another way of hedging a bit, taking some profit. Obviously, I wouldn't hedge my entire holdings because I don't keep that much on BitMEX. But if one wants a little bit of extra cherry on the top. But here's the thing: rules for shorting. Shorting into parabolic resistance or whatever is very dangerous. Shorting in a bull trend is very dangerous. In my opinion, something that should be done on low leverage, tight stops, and not. It's a lot more risk than spot because you can get liquidated. And in my opinion, if one is gonna ever play the margin game, if you're gonna be a crypto cowboy over on BitMEX, you're gonna scalp or do whatever. My rule of thumb is do not put more money on BitMEX, whatever exchange you're using for leverage. Do not put more money on that exchange that you're willing to lose in case you get liquidated, right? So if you had if you had 100 Bitcoins on BitMEX and you're trading with that, it's like, why would you do that? Why would you do that? You could use leverage. That's the whole point of it. You could use smaller amounts and leverage it up. Why? Doesn't even have, you can't even leverage 100 Bitcoins on BitMEX because there's not enough bloody liquidity on there, right? What are you going to do? 10x that and do 1,000 Bitcoin short or whatever on BitMEX? You could do that, but if it goes against you, you can stand to lose a lot of money, right? And you might think you're the best trader in the world, but again, obviously there's two reasons why you shouldn't have more money than you can afford to lose on any exchange. Number one, if you're margin trading, you can get liquidated. Number two, counterparty risk. Exchange gets hacked, your coins are gone, period, right? So again, risk to reward. Risk to reward is a lot more in favor of keeping your own private keys in your own wallet, not keeping excessive amounts of money on the exchange. If one is going to swing trade and hold positions for months or whatever, you can store it offline, and when it's time to sell, then you send the coins over. It might not be as quick, but you're getting the extra security out of that. And this is the beautiful thing with bull trends, is that you can keep your coins offline. You don't have this existential crisis around where do I hedge? How do I lock my value in? I got to keep money on all these exchanges and so on and so forth. So if we do break this resistance, 10K is a major area I'd look at. I think altcoins would push up with it. Probably lose a little bit on the BTC chart as a knee-jerk reaction, and then when it cools off, push up with it. And then eventually we'll end up with a correction. I believe when we get our 30 to 40% correction, I believe a lot of altcoins will drop significantly as well, right? I don't believe that if we see, the interesting thing with 10K is if we did go to 10K, testing this very important magic line in the sand, a 6K that's been support for majority of 2018, would be a perfect 40%. Perfect 40% correction. That to me would make a lot of sense. Similar to this, see? 40% correction. Maybe a little bit more, 41. See how it went? There's like parabolas within parabolas. So this is a parabola, breaks out of the range, then it spikes right up, has a big violent correction, nice dead cat, and then a long, slow period of consolidation until the next move. You know, this whole thing is like 6 months of consolidation before the next move. So, you know, a lot of people are just kind of expecting, oh, okay, our market's going to recover now, or 33K by whatever, right? We're going up tomorrow, right? If that happens, I'll be happy. I'm not going to complain. You know, I've got bags, I've got coins, whatever. I'll make money. It's fine. I'll be pleasantly surprised. I'm not expecting that to happen. I'm a bit of a realist. I expect long periods of consolidation. I don't like. It's better to set your expectations low and be pleasantly surprised than to set them too high and then to be disappointed, right? So, you know, when we were down in the gutter down here, I psychologically prepared myself and said, you know what? We could go sideways till 2020. We could go sideways to 2020. That is what I said in my mind. Just to set the stage to have some patience, right? Just to set the stage to have some patience. What happened? This sideways period didn't last as long. It started breaking out a lot sooner, right? So pleasantly surprised. Also, one of the reasons why we're big fans of scaling in and out incrementally, percentage-wise, is that if you do go all out, anticipating something, then it doesn't give one much room for adapting or being wrong, right? Whereas with the middle path, you know, one could scale out some of the position. If it flops, maybe you end up cutting out the rest, and then you have a nice little dip you can go hunting for. If you're wrong and that's not resistance and it pops and goes higher, well, you still have some coins. So this is the value. This is why we're all about scaling in and out, because like otherwise it just becomes too binary. It's like flipping a coin. It's like all in, all out, all in, all out, and then one's always constantly having to you know, figure out what the next move is. Also, think of it this way. Market goes from here to here. You go all out. Let's say you bought the exact bottom. Just, you know, as an example, you bought the exact bottom, made 75%. And on top of that 75% you made, depending on your jurisdiction, you now have a tax debt to the government, right? And then the market goes up higher. So not only does one miss out on this move by going completely all out, one also now has a debt on top of that. Whereas if one just scaled out a little bit, then one would still have more profit on the table and a smaller tax debt. Right? So this is exactly like, having seen how battered the markets have been, how much things have bled out, how frustrated people have been, how choppy it's been and stuff. You know, without necessarily knowing exactly where Bitcoin would top out or exactly where anything would top out, stuff like that, just looking area by area, level by level, it's counterforce, right? You got to think, okay, well, things are bad or things are really low. People are really pessimistic. Things are really choppy. Things are really slow. Lots of inertia that's being really boring market, all this stuff. The counterforce to that is lots of momentum, a push higher than people's expectations, so on and so forth. And that's typical. One of the reasons why I think that's a bit of some bullish confirmation on top of the higher high is that when Bitcoin starts to surpass people's expectations, then that's typical Bitcoin bull behavior, right? So, all right. So anyway, so that's all Bitcoin right there. Just do an overview. So you'll notice too the different trading styles between Chris and I. Like, so I'll give you an example. Chris and I are both in so we're in the same market, right? We're both in Tezos. We're both you know, bullish on it, so on and so forth. And there's different ways of handling it. And we might even have a similar cost average price too on handling it. There's different ways. So Chris likes to trade breakouts on momentum, right? So Chris will wait for the market to make a move up, for momentum to move in favor, and then he'll catch breakouts. And you all know how that works. You've seen that, so on and so forth. And it's just kind of like yin and yang. And I'm like the opposite, right? So I started in a bit here, and then as it goes down, I basically just started averaging down wherever, and then bought some more and various different spots. I even took some BTC too. So I emptied out all my trading accounts. One of my fiat accounts got hacked. Quadriga, they went down. So I didn't have the entirety of my trading capital available, my fiat available. I did take a hit. And I also went in a lot heavier on Tezos than I originally intended to. And there was kind of a method to my madness. One of the reasons for that is I also had to adapt for the loss that I took on Quadriga. And so it might sound insane that after taking a hit and having some of my trading capital lost, a lot of people would recoil from that and minimize their risks. Like, oh, I don't want to lose more, right? So I need to reduce my risks. I need to be cautious now. I already took a big loss. But because I've kind of crossed the wires in my brain a little bit, being in crypto, I basically went a lot heavier so that I can recoup what I lost a lot faster, so on and so forth. There's like fundamentals, all that kind of stuff. And I was at that point, I was committed to getting my average as low as possible, right? So I could have played things better. I don't have any regrets buying in right here, but I should have bought less, smaller size, got a little bit impatient, right? And then, the whole averaging down, well, I don't really know where the bottom is. I just stacked buy orders all the way down. And the interesting thing with that is when the markets are dumping and they're capitulating, the interesting thing is like people are willing to just dump any amount of coins and wholesale. So if you want really quick accumulation, and you want to be able to get like nice sizable orders filled, and the market's dumping really hard and capitulating, just stack a bunch of large bids along the way, and they'll all get sold into like butter, most of them. And so just kind of, it makes it a lot easier. It's a lot easier to like jump into the fire and have all your orders dumped into than having to mess around in this flat, low volume. See, look how high the volume was, right? People are like, they're in panic mode. They're like fire sale of their coins, right? I don't want these anymore. Get these off my hands. These coins are burning my fingers, and they're just dumping en masse. And so you kind of, counter trade that, right? Easier said than done. And obviously it's not like I wouldn't say that, I wouldn't call this standard risk management. This is like cowboy trading, high risk, high reward, right? I love jumping in the flames on capitulation. I love doing it on dips, bounce plays. And the only interesting thing with this though is I was expecting this bounce play to actually, on Bitcoin and everything, I was actually expecting more of an initial bounce play. And instead of at least having a little V bottom, so what I was anticipating is that you'd hit counter force because it's dumping so hard on some nice volume. All the markets were, Ethereum, Bitcoin. And then we get a nice little V bottom, and then we would drop, and then we'd maybe channel around and create accumulation. But what was really kind of interesting and unique to this is we just dumped, and then dump, and then we just went flat with inertia. And so this is why I call it like the slowest bounce play ever. It was still a bounce play, it was still valid. It's just I've never had to wait so bloody long for, usually when the markets capitulate or sell off hard, they V-bottom. And same thing happened with Bitcoin, and that didn't happen in 2015. It V-bottomed initially. So like this had a little bit of a V-bottom here, but compared to the size of the dump, this is not your typical bounce play V-bottom. I don't even think it came up to 50% retracement, right? It came up to like 38.38. Actually down here, it didn't even come. When it hit a bottom, it came really on the low end here, right? Typically, on a bounce play, it'll at least hit 50 or 61.8% and then drop and then maybe go with some inertia. Just like hitting that rubber ball, you hit counterforce. The counterforce is very weak and it had a lot of inertia, right? So I think, I'm not quite sure why it happened that way. I did start to notice that the bounce plays were a little bit more sideways and choppier, right? Like you remember, like every single bounce play, like I'll just show you what I'm talking about. Like every single bounce play I traded in Bitcoin, the good ones had really, like look at this, right? Look at this capitulation over here, right? It dumped and then it basically came all the way back up. It pretty much like the V bottom was so strong, it popped a double the next week, right? So this is the kind of thing that I was anticipating, right? Because it had such strong selling, which is why it went so hard on the averaging down and stuff. But then it didn't happen. So from that point, all I could do was be patient and perhaps buy some more coins along the way, and that was it. That's all I could do, right? Which, is a lot easier said than done. This is, in the hero's journey, this would be the dark night of the soul where all is lost. Everyone on social media is crying that everything is a scam, right? ICOs are a scam. These exchanges are a scam. Everyone's a scam. You're a scam. Remember we talked about that? Everything was a scam. All crypto was a scam. That was the market sentiment. Everyone was just so full of hate and so bitter and just so broken from this, right? And it was very popular to hate on dip buyers, to hate on people accumulating, to hate on averaging down, I saw a lot of posts on how irresponsible it is to average down and that's shitty risk management, all this kind of stuff. And there's nothing is etched in stone. So is it more dangerous? Yeah, absolutely, for sure. Is it for everyone? No. Could you average down and then get wrecked and then not be able to control your emotions? The key is controlling your emotions. Could it have gone lower? Sure, right? The key is to control your emotions on the sideways, boring chop after being in deep and waiting. And in all honesty, I really believe that's something that can only be acquired through experience. But pretty much every single bounce play I've traded, and like we've traded pretty much like almost all of them in the past bull trend, and a whole bunch of them in the bear trend, and still until we got into the slow grind, then it wasn't they were weaker and it wasn't as fun. So that's something that comes with experience, right? And also, you also have to work up into size, right? So basically, just to recap on all of this, on this bear trend, up here we talked about hedging and all, if you've made life-changing, people probably remember my mantra, if you've made life-changing amounts of money, pull it out, blah, blah, blah. We had a little bounce play here. I think we traded a little bounce play here. This was an epic bounce play. This is like the best, in my opinion, the best trade of 2018 for me anyways. I went in hard, started averaging down from 8K down, nice little bounce play. This one was profitable too. And then they started getting weaker and I start to tilt. But here's the thing. If you look back when I talked about my percentage allocation, at this junction in time, I was probably in about 20% crypto and 80% fiat. Maybe even up to 30. But for the most part, even with this, like even with these bounce plays, I was being very conservative and keeping a lot of fiat. And then when we start to capitulate, the only thing that I was capitulating in all of this was my my fiat. I was capitulating my fiat. And also then the Quadriga hack took a bite of some of my reserves and was also a nice friendly reminder, listen, the risk to reward and keeping money on exchanges and trying to play all these stupid little tiny moves. Risk to reward has shifted. Get your money off the damn exchanges. Own your private keys, withdraw it, don't keep anything. I've got nothing. The only money I have is a little bit on BitMEX. I don't have anything else on the other exchanges. It's all basically in my wallets, and I've got fiat in the bank, right? If I ever need to use it for whatever reason, like if an oh crap scenario happened where for some reason we're all wrong and the mega bears are right and we do drop down to 2K, then I would deploy some of the fiat out of my bank. Not all of it, obviously. So I'm well diversified. So this is just what I'm playing around with, just as far as my crypto. But I'll tell you, on this drop, this is the heaviest I've gone into crypto in a long time. Probably since like 7K, or like, I was heavier in through here, and then we went a rip, and like I was a lot more conservative in 2018 with my 20% of coins. I bought some duds. I bought some shitty alts that didn't quite have the bounces or whatever. These dead cats got smaller. So I was out of that. So, and that's why position sizing, why we kept preaching position sizing, don't go all in, don't go too heavy yet, blah, 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 blah. And then in my mind and my plan was if we capitulate, that's when I would go heavy. That's when I'd press the gas. Right now, I'd have even more crypto if Quadriga didn't get hacked, but so be it, right? You adapt or die. That's the motto for crypto, for the crypto markets, right? So you can't, if you're in a boxing ring, you get punched and your nose gets broken. What are you gonna do? You're gonna run out of the ring and go cry to your mom, right? No, you're gonna get up, wipe the blood off your nose, and you're gonna punch your opponent out, try to knock him out, right? So that's basically what we're doing. You're just boxing with the markets, right? Just for some comedy gold, just because I think it's hilarious. I already posted this. I want to share this. I think I got mixed reactions, but I remember when it was cool to hit on dip buyers, averaging down and accumulating. This to me was very popular at the bottom. And then, so I basically just pointed out, cash settled futures at the highs, great for shorting. BTC settled futures launching at the lows, accumulation. I mean, I've been kind of just every update, I've been kind of hammering this message. I'm like, if you'll go back, you'll remember me saying My favorite point in the crypto market is when the fundamentals are extremely bullish and the prices are really low and the prices aren't reacting to all these bullish fundamentals. That's my favorite point in the market. That is literally my favorite point in the market, because for me, that spells the point of max opportunity. That's where I get the most excited, right? I wasn't excited up here. I was disgusted, right? Anyone who's with us for any length of time knows I was kind of disgusted. And what I call this, everyone's pumped up sloppy table scraps, right? It's like, what are you doing buying Vitalik sloppy table scraps at $1,400, right? Stupid things, right? And a lot of people rushed in. What do I want to buy stuff? I want to buy. What do I buy? What's a good deal? Let's get a moon. How about the $1,500 Dash and the $1,400 Ethereum? You think I should drop, whatever? Or how about, what was it, the $8,000 Bcash? Remember that, right? Yeah, I'll go drop 8K on one Bcash. Oh God. But you just gotta apply like very, very simple logic to this. Buy low, sell high. It's literally, it's the simplest, most two-dimensional, stupidest thing, right? Like, you really, like, just go out, get a tattoo, go brand it to your arm or whatever. Buy low, sell high, period. Just brand that to you. Live by that. If there's only one rule, if you throw out everything out the window, if there's only one rule to live by, that I live by, is buy low, sell high. Does it mean that I nail the exact bottoms? No. Sometimes I do. It's nice when I do. I get my little certificate of participation in the mail when I do. Maybe I get a little ribbon or something, a little tinfoil trophy, if I nail the exact bottom. But no, that's usually not how it works, right? Usually you just got to average down, or, it can get really messy sometimes. It can get messy, right? You're in the trenches. Who the hell goes out in the battlefield and comes out unscathed, right? You come out of it messy, right? So it gets a little bit messy. So it's not perfect. Not necessarily aiming for exact bottoms and tops and such, similar to what Chris said, right? And can one always improve? Yeah, if it gets a little messy, then maybe one goes back on the drawing board and, okay, how could I have improved this? Okay, maybe I start scaling in a little too early on that, so on and so forth. And then you just kind of improve. Does it still end up, can it still end up a winner, profitable, so on and so forth? Sure, right? Anyways, everyone's got to figure out what's right for them. I think people can adapt trading styles based on their personalities as well. So like Chris really likes paying a bit more for confirmation or waiting for momentum, so he doesn't have to wait around forever for market to move. And that's a really good approach, because he takes a breakout trade and then next thing you know, the market's moving in a favorable direction. My approach can be a little bit more riskier and sometimes requires a bit of patience. And actually, you have to have like a really strong emotional resolve, and there's no guarantee that that's going to pay off, because there's never any guarantees, right? So you have to manage emotions and be uncertain at the same time, and accept the uncertainty of it at the same time. So it's like this weird paradox between confidence and uncertainty. I don't even know how to describe it, but it's like a paradox. And so the mind doesn't really like paradoxes very much. It's almost like a form of cognitive dissonance. This is why people have such a difficult time trading in the markets, because it's just constantly full of paradoxes, right? And so you have to just learn to be comfortable with that, to be able to sit with that, right? So anyways, just looking at this meme, I think by the way, I think this is a hilarious meme. I mean, I got a chuckle when I got a response. It was also a very popular meme, right? But you see this, this little institutional money coming. We are in accumulation phase, bro. Lambo soon. Still down in USD, but up in Satoshis. Backed is coming, bro. Crypto's maturing, bro. I mean, it's pretty funny, but the reason why I posted it, and the reason why I feel like I have the right to shots fired. I'm like, okay, screenshot taken, click. I'll come back to this in a few months, see where we're at. Anyways, so then it makes for a funny tweet, right? And at the highs, it was the opposite. I didn't take any screenshots of the memes at the time, but I remember, I wish I could go find some if they weren't deleted. But I remember there were similar memes, but instead of all this stuff, it was saying, it was just basically making fun of people who were taking profit. It was very popular to make fun of people for having weak hands, something like that. I even remember, like, what was it, Stellar? I bought it at 2 cents, and I think I sold it. I think I almost nailed the top on Stellar. Where was it that I sold it? How was that? Yeah, above 80 cents. That's right. I sold this crap. It was like 82 cents or something that I sold. Yeah, it was like 80-ish cents. That's right. And I bought it like literally like at 2 cents. And I remember taking profit on it. And I had almost very, very low follower engagement, not a lot of likes. And I think someone even trolled me a little bit and commented, about having weak hands or something. Like, it's like, I don't know, 8,000% ROI. I don't know, folks. That kind of seems like good enough profit to me. I don't know. Some other funny stuff. So here's something interesting. So I posted this December 30th, 2017. Many people excited for 2018. Haven't seen too many traders entertaining a real bear trend for the entire crypto market. I guess 30,000% gains this year isn't good enough for profit taking, right? And then so I wanted to do the yin and yang of that tweet. So I retweeted it with a fresh comment. Similar time was November 23rd, but similar period. Fast forward 1 year later, many people scared that 2019 will be a prolonged multi-year bear market. Seeing lots of $800 targets on BTC from people never had a chance to buy at those levels. I guess an 80% discount isn't good enough to start scaling in, right? And the problem is like, if you're trying to be absolutely perfect and to try to nail the exact bottom, what could end up happening is you'll get nothing, right? You can end up getting what I refer to as what is referred to as paralysis by analysis, right? Where it's like overanalyzing things and not being able to pull the trigger and so on and so forth. So sometimes you even got to counter trade yourself. So that's just, general examples of, of stuff, just general examples, but, obviously you're going to make mistakes. Everyone makes mistakes in trading. That's a part of the game. Sometimes it gets messy. Sometimes when it gets messy, it can still turn out profitable, and sometimes not. Sometimes you have very structured risk management. Sometimes I hit the gas. Let me just tell you that when we were capitulating, I pretty much kind of through a lot of, like, I just kind of went a little bit heavier than usual, and I really don't recommend doing that. Actually, I don't think it's a safe approach or a wise approach or a sane approach or whatnot. It's kind of one of those things where I was telling you what I'm doing, but like, don't necessarily just follow me blind into the fire type of thing, because it can get awfully hot down there. Another thing that I want to point out, one last thing, is that I get a bit of an exit. So I talk about general price targets and stuff. I will get a little bit of an existential dilemma with take profit targets, right? Because, the last thing I want to do in a market is influence other people's decisions. Contrary to maybe other people, maybe there's other people in the market who would absolutely love to have influence over people's decisions or the markets. I actually don't want that. I don't care for that, right? I would actually prefer not even to tell anyone where I want to sell. or influence the markets. In the perfect world, I'd prefer everyone to just make their own decisions, right? Like I said, I'm just a tour guide, so I don't, and it's like, it turns into like one of those damned if you do, damned if you don't type of scenarios, right? Type of thing. Like, I'll give you an example. I'll give you an example. Anybody remember ICN? Oh, this got delisted like a long time ago. I remember this. How long? Is this still trading somewhere? Okay, there's no fiat anyways. And there's no like price, there's no charts anymore. This got delisted off a lot of things or whatever. But anyways, ICN back in the day, I had a trade alert, sent out a trade alert. It was a breakout at 30 cents. Held it for like, I don't know, 3-4 months. And then I took profit at, $5.30, which was almost the top. It's almost the top. But then I had some people messaging me like, oh, did you create the top or whatever? And it's like, well, my position wasn't really that huge to do that. But it turned out that everything topped out at that point in all coins. But it's like one of those catch-22 scenarios, right? So ultimately, my point in all of this and saying all this is I think everybody needs to have their own plans. Let's not create crowded trades where everyone's looking at the same bloody areas and mimicking each other and doing the same thing. We're not like an army of, automatons or whatever, this trading community, investing community of warriors that requires making one's own sovereign, independent decisions as well, right? And that's something that I actually feel is quite valuable, and one thing that I value a lot in life is the average individual's capacity for self-determination in life, whether it's being autodidactic in their education and their studies and their growth and their learning in life, or whether it's to question politics or social norms or marketing or all of that stuff, right? But, they say that the road to hell is the wide road paved with good intentions or whatever. I mean, usually the wide path where all the sheep are walking, like that is not the path you want to be walking on. They say, oh, well, only 10% of traders or investors make consistent profit and, the rest lose money. Well, if you want to be in that 10%, or even better yet, the 5 or 1% in the markets, if you want to be, top of the game, you really have to think for yourself, right? You have to come to your own conclusions through your own experience. And that doesn't mean that we don't listen to other people, because listening to other people and seeing other people's perspectives and charts and ideas and whatever and insights that we share, like people share stuff in the trading community. This is like taking data in, right? You're taking information and you're taking data, and then you have to take that data and you need to digest it. You need to process it and then come to your own conclusions. When it's digested and you synthesize it, then you come to your own conclusions, and then you can create a plan that's suitable to yourself, because everyone's in a different situation, right? Everyone's a different part of the world. I go on, I'm like yammering on about taxes and all this crap. And maybe you're living in Grand Cayman and you're like, man, shut up about taxes. I don't have to pay anything over in my area. I don't have to worry about that. Therefore, my trading plan doesn't have to factor in taxes. Therefore, I'm going to trade different than Rocky because he has crazy taxes over where he's at, and I'm in a tax-neutral jurisdiction that has 0% tax on anything. So you don't have to think about that. You might have to adapt a different strategy. Or, you might be in the US and they're like, well, if you hold your coin or your investment for a year, then you pay long-term capital gains. And that might play a factor into your overall meta strategy so on and so forth. That's just one example of how things can differ amongst many different traders. We might have like different goals in life. You know, somebody might be like an extreme minimalist and you know not need enough to get by and therefore be able to take bigger risks. Another person might be raising a new family and not able to take as many risks. And then, you know, you have different portfolio sizes, different experiences. You know, some people might lean a little bit more left brain, some people a little bit more left brain. Ideally, you have a balance between the two hemispheres, all this kind of stuff. So many different variables, absolutely so many different variables. So to just look at what I do and just blindly follow me, well, it'll be extremely difficult to do that because everyone's their own person. So you're going to have your own emotions and stuff to contend with. You know, for example, Chris took some breakout trades and he had different areas where he sold and stuff. And some people might have shadowed it exactly, but I'm sure a lot of people probably bought or sold at different areas. Maybe even bought different markets. He took an Ethereum trade. Maybe you decided you wanted to take a trade in something else. So that's the general thing that we encourage. And one thing that I just want to keep reminding people, especially if we get new people coming in, just to kind of like set the stage of what our intention is with the community. We're not just like some kind of like pump signal service. You know, there's all kinds of, you know, trading groups out there that are just like pump signals. So here's, you know, buy this, sell this, you know, they just kind of bark orders and people follow along. And if that's what you're into, that's fine, you know, but ultimately our goal with all this is predominantly education. You know, it's just conveying our experience in the crypto markets and what we've learned. And then Chris also has some additional experience trading futures and equities before crypto, right? So that's really at the end of the day what it comes down to. And it doesn't mean that we're perfect, and it doesn't mean that our word is gospel, and it doesn't mean that like if I say my target's here, whatever, blah blah, that the market has to do that, or you know. So everyone, the only master in all of this is the markets, right? The markets are king ultimately, right? That's the ultimate arbiter, the ultimate judge of all trades, right? So, long-winded rant. I'm just going to jump into some news quickly, and then I'll answer some questions, and then we'll end it. So, the two biggest news events, in my opinion. Anybody hear the Microsoft news? So this is fairly major news. So Microsoft wants to build a decentralized digital ID verification system platform as a layer 2 on top of Bitcoin, on top of the Bitcoin network. So out of all the blockchains, they chose Bitcoin. They could have done their own private blockchain. They could have tried to launch their own Microsoft blockchain or Microsoft coin or whatever, but they chose Bitcoin. And I believe they chose Bitcoin for two reasons. Number one, it's the most secure blockchain in the world. Number two, the network effect of Bitcoin. Right? It's the most decentralized, one of the most decentralized blockchains in the world. So security, decentralization, network effect. The reason why this is big news is because Microsoft is a giant. Microsoft is considered a pillar of the US economy, right? When one giant starts signaling that they're going to be building stuff on top of Bitcoin, suddenly we could start to see a meta trend where other corporate giants start to do the same thing. Then suddenly this starts to accelerate Bitcoin's network effect. Then suddenly it starts to grow as a network, not just as financial transactions. So that's the base layer would be financial transactions. One thing that we often forget is that Bitcoin, the coin on the Bitcoin ledger, is created as an incentive mechanism for miners to keep the ledger secure by having it push continuously forward, upwards and onwards, so that you can't rewrite and double spend things, right? but it's a ledger. It's a decentralized public ledger. And so this company, Microsoft, is leveraging that ledger. It sees that, hey, you know, if we want decentralization and a secure ledger that doesn't compromise immutability, they could have built it on Ethereum, but guess what? Ethereum compromised your immutability. So if they actually want like a solid ID system, then your ID is kind of immutable in a sense, right? Unless you change your name or whatnot. But for the most part, it tends to be immutable. You want it immutable. You don't want someone to be able to rewind the network and change everyone's IDs around it, take people's IDs away from them. So you need a kind of a sense of permanence, right? Well, you know, it's certainly not going to be built on EOS with 21 block producers who could all get together on a Skype call and then change everyone's ID around willy-nilly, right? Just rewrite the state of ledger and just all vote for it, all 21 validators, and there you go, boom, right? Ethereum did something similar. BSV, Bitcoin Satoshi's vision, it lacks in security. It could be 51% attacked for probably pocket change. It doesn't have the hashing power, the network effect that Bitcoin has. So, oh, okay. No, but I know some people have been pushing that, and you know, some BSV people have been like, oh, look, we already have an ID system, blah, blah. And it's like, yeah, and your hashing power is shit compared to Bitcoin. You could be 51% attacked for relatively cheap. You know, like Toshi, what's his name? Charlie Lee pointed this out. Very, very, very good point. Very valid point. Basically said in proof of work, the only secure blockchains are the ones that are the dominant algorithm. All the lesser algorithms that are having a share that have less hashing power than the dominant algorithm, they don't cut it. They're not as secure. They're weaker, inferior version, right? People can have whatever philosophical and political debates they want. Someone could say, oh, but you know, I believe Craig Wright is Satoshi, and I hate Lightning Network, and I think it should all be on chain, and I think we should have 1,000 gigabyte blocks or 10 billion terabyte blocks or whatever. You know, my node, I should have a data center just to run a node or whatever. We could all argue and have our own philosophical and political opinions. We could all voice it, and we could all compete for market share and dip our oar in whatever tribal camp we belong to, and basically fight over who's going to win. But guess who decides? The markets decide. And guess what? The markets don't give a flying crap about anyone's opinions, right? It does in some ways. It's a reflection of everyone's opinions, right? Because we act based on our opinions, but the markets decide, right? So you can have a marketing campaign, you know, and say, oh, my fork is the real Bitcoin. Why? Because I have millions of dollars and I have, you know, marketing power, and I can basically just tell people that's the case. But that doesn't make it reality. I could sit here and preach to you all day. Hey, listen, I got 16,000 followers on Twitter. But if I tweet that I'm the king of England, does that make me the king of England? What if everyone here agrees that I'm a king of England? What if all my 100,000 followers believe I'm the king of England? Does that make me the king of England? Right? No. No, right? It doesn't. So the markets decide. And what's the markets decide? Markets decide that BTC is Bitcoin. Bitcoin is Bitcoin. Liquidity, price, correlation, hashing power, network effect, first coins getting listed, first thing that financial institutions are interested in building products. You know, if BSV were the real Bitcoin, then Fidelity would be opening that up right now and Bakkt, and everybody would be claiming that, and the price would be bigger, and everything would be correlated to BSV, but they're not. So ultimately, it can compete. It can try to be the Bitcoin. It can give one hell of a show if it can. But ultimately, at the end of the day, the markets decide, the network effect decides. And this is a part of the markets deciding, right? This is a part of the network effect. So it's all interesting, interesting stuff. So, dominant algorithms, just an example, Ethereum versus Ethereum Classic, right? Ethereum's the dominant algo. Ethereum Classic tried to be Ethereum. I actually philosophically and politically aligned with Ethereum Classic back in the day, but the markets decided that Ethereum is Ethereum. It's the dominant market cap. Between those, it's the dominant hashing power. And guess what? Ethereum Classic got 51% attacked last year on the cheap. Whereas Ethereum is a lot more difficult to do that because it's the dominant coin of that specific algorithm, which is Equihash algorithm, right? So, and then Zcash has its algorithms, and everything has its own, was it Litecoin script? Something like that, right? So, next news, mainstream growth, mainstream adoption. Whole Foods and Bed Bath & Beyond and a bunch of other places you can now pay for all your stuff in crypto and Bitcoin using you're using a payment gateway, but it's a step in the right direction, right? So we're getting closer and closer to mainstream adoption. These are all signs of mainstream adoption. So I believe the next bubble is going to be that S curve in technological user adoption, right? We had a taste of it in the last bubble when you have celebrities shilling it, talking about it, right? But we didn't hit market saturation yet because obviously market saturation isn't under $1 trillion market cap. The current market cap of cryptocurrencies of Bitcoin being 140 billion, that's not quite market saturation. Let's get up to like 5 trillion or so, the overall market cap, then maybe we could start to talk about market saturation when we're in the trillions. But, if you compare this is like a small, low blue chip stock, really, right? Whereas like this is an industry, this is an entire industry. This isn't just like one stock, this is an entire sector of the economy. And the more mainstream it becomes, the more of a backbone it'll be in the economy. All right, getting to questions. All right, so let me just scroll up. I know I had some questions here. I'll just try to, let's see. Okay, one question is, I make pretty good money at my job, so I'm really more interested in increasing my Bitcoin holdings. Can we quickly go over trading BTC charts because I'm finding it difficult? Wondering if I should just trade the USD charts as it seems easier, but how does one accumulate Bitcoin from trading USD? So the dirty little secret in crypto, it's not so much of a secret, but the thing with crypto is the fastest and most effective way to accumulate Bitcoin is to trade altcoins on the BTC charts. So if your game is to accumulate more Bitcoin, Bitcoin's in a bull season, then trade the altcoin BTC charts, because every single time you lock in profit from an altcoin, you're going to end up with more Bitcoin, right? And altcoins are a lot more volatile. So obviously, like, you can lose a lot more Bitcoin with them, but with that bigger risk comes bigger reward potential. So they're a lot more volatile. So if you get a good alt season, you get a market, you take a dip and it pops, you get a 10x, suddenly, you've just 10x whatever Bitcoin you put into it, right? Based on my experience, the number one way where I've accumulated the most Bitcoin was by trading altcoins. And just to give you an example of what I'm talking about, let's see. Just to give you an example, this July, so we had two alt seasons in the 2017 run. We had one that was all-time highs on the BTC charts, and then we had another which was all-time highs on the USD charts, right? If you get to all-time highs on the BTC charts, you can acquire a crap ton of Bitcoin before Bitcoin takes off. During this alt season, this is the craziest alt season I'd have ever traded. So it was like pretty much from March to July. It's trading all kinds of stuff, so we'll call it a good 3 months. I had accumulated more Bitcoin in those 3 months than the entire previous 2 years combined. Just something to think about. About like if you get a really potent alt season, how much, because I started off with very little. So when you start off with very little, it can take a while to build things up. And then you just keep saving, keep trading, and you get moves and stuff, but not the crazy, insane parabolic moves we had on that alt season. And then you end up with a stash of Bitcoin and you got more to risk. And then you put in, let's say, I think I probably put in about a third of my stash into, actually, when Bitcoin was dropping, I'd put in half my stash into altcoins at the time. And then next thing you know, like things are popping off, 3x, 5x, 10x, 20x, so left, right, and center. It's like you put some Bitcoin in, you pull a whole bunch out, so on and so forth. So that's one way, one aggressive way of accumulating Bitcoin. Another way of accumulating Bitcoin, which is a little bit more dangerous, is playing on BitMax, trading on BitMax. A lot of people use BitMax as a way to accumulate Bitcoins. And that certainly can be a very effective way because you can turn a little bit of money into a lot of money because you have a whole lot of leverage. So that increases your percentage gains exponentially, but it does come with a lot more risks. In my opinion, so altcoins, so basically there's 3 ways of accumulating. The lowest risk is you trade Bitcoin alone. It's less volatile, it's more stable. Maybe you buy a dip, so let's just look at that. So we'll look from least risky to most risky. So least risky is, let's say you bought some Bitcoin in at the lows and you're like, okay, looks like it's topping out. Let's say I'll sell half right here and I'm just going to patiently wait till we get a dip. And I'll stack some orders down here, right? So now you've got some money, you've got down here, suddenly whatever Bitcoin you sold, you can now increase that by 40%. Now you have 40%, 30 to 40% more Bitcoin than you had where you sold. And then let's say you're wrong and it goes up higher. Well, markets don't go up forever unless for whatever reason this just really throws us all off and does give us this crazy parabola and does another one of these. I don't think that's going to happen, but you never know with Bitcoin. Crazy things do happen, but I think that's the least likely, but you never know. So let's say, you sell half your stash there and it goes up higher. What do? Do you FOMO chase it up more? No, you wait. Okay, maybe you adjust your dip. Maybe you're not going to get it down low. Maybe you now have to put your dip at 6K. And then eventually it comes down and hits your 6K. You didn't quite nail the top or whatever, but you're still buying in cheaper than when you did. So it was a little bit messy, wasn't perfect, but you're still getting more Bitcoin. And then basically on the bull trend, pretty much every single time you hit a major price correction. So every time you hit a new level, you can take profit. So let's do a fib extension. This came fairly close to 1.618. Has a 40% drop. Nice throwback. Prior resistance turn support. If you sold some Bitcoin up here, now you can buy 40% more down there. Same goes with here. You can buy 40% more here. Probably 35% more here. So on and so forth. So what I would do in a scenario like that, if it were me, If I just wanted to play Bitcoin, like, you know, because you could really simplify things and just focus on one market, especially if you're just starting out. What I would do is I would just have my different capital buckets. So I would have one long-term stash that I'm just not going to trade with and I'm not going to touch no matter what. And that's like, you know, personal hedge in case your trading goes wrong and you don't time things right and you mess up and the markets leave you behind. Well, you still got your long-term stash of Bitcoin. You're not out of the game. It's all good, right? It'll prevent you from doing stupid things like FOMOing at the wrong times and all this kind of stuff. So that's like the most conservative approach as far as like risk management. You know, the next approach is you play altcoins. The key with altcoins is you just got to try to buy them as cheap as you can. And that's a lot easier said than done because you can think it's cheap and then it drops lower. So obviously position sizing, stuff like that. Or you could just aim for breakouts similar to what Chris has been doing and then scale profit along the way in BTC, right? Just be mindful of your taxable events. If it's crypto to crypto, or you still might have to pay a tax bill. So even if you're making profit, you still might have to pay for some of that. So you might want to sell some in fiat unless you've got other fiat that you'll just pay towards the taxes or whatnot. And then the most aggressive approach is trading on BitMEX with a bit of leverage. In my opinion, if we're in a bull trend, you're going to play that game. The way to do it is to buy the dips on every major correction and then trend right up and then scale it incrementally along the way. You could scalp too, all the smaller moves, right? But that takes a lot of time. You got to be in front of your screen and stuff. So if you use too much leverage, a winning trade could still get you liquidated or have you lose. So for example, this is why it's risky. Let's say you're like, oh, I really think this is the bottom right here. And you go in like, you know, 50x leverage, and then the market comes down here, well, you know, and then you get liquidated, but then it bounces, it goes in your favor. It would have been a profitable trade. You would have made a crap ton of money, but you got stopped out or you got liquidated and you're out of the trade. It's over. So you were right, but you still got punished because you used too much leverage or tight stops were too tight. So if you use lower leverage, then you could have stops that aren't as tight, and you'll let the trade breathe more. It's a lot more riskier, and that's, in my opinion, I think, you know, that should be like the last means of accumulating. I personally think all traders should know how to be consistently profitable trading the spot markets before going into margin. That's just a rule of thumb. If you try to cut your teeth on margin, I guarantee you're probably you're gonna have you're gonna have some dark moments. you're gonna go through some pain, right? That's so. That goes with the territory. So margin definitely requires a high degree of risk management, emotional control. And I personally, like, I don't really trade margin these days as much. I used to scalp a lot on BitMEX and stuff. I don't really do that anymore, predominantly because of lifestyle, right? I want to make money and enjoy my life. I don't want to be stressed. I don't want to. I value my sleep. I really value my sleep. I love sleeping. You know, they say get a good 8 hours sleep. Your immune system will get reduced by 70% if you don't get a good night's sleep, right? I used to have long nights grinding it before, sitting on my computer 14 hours, trying to catch every move, trying to be the biggest baller, hustler in crypto, whatever, trying to make as much money as I can, just obsessing. It was like an addiction, right? And then I realized I burnt out, right? Because that's not sustainable. It doesn't matter how good you are. If you play that game, you're going to burn out. And if you burn out, you're going to start to tilt, right? Because your performance is very much linked with your mind and emotions. And so then I had to adjust things. I had to adjust my life, reassess my life, made my pay dirt. So I got to relax a bit, readjust things. Go for setups and strategies and ways of doing things where I can still make money, have fun, be in the trenches, be on the front lines, know what's going on, but doing it in a way where I can do other things, where I can go out and exercise, hang out with friends and family, do other things in my life, not be a slave to the markets anymore, right? So I'm not a slave to the markets anymore. So that's, but everyone's different. Everyone's going to be in a different phase, different cycle, different goals. But, you know, maybe when you're starting off, like I don't regret grinding and hustling so much, because honestly, like when you're starting off, if you have certain financial goals you want to achieve, like you have to, those goals you have in your mind, if you're really serious about achieving them, they have to literally be a burning desire. Like you will, whatever it takes, as long as it's legal and ethical, you'll do whatever it takes to make that money, right? If it means you have to grind it out for 15 hours a day, doing whatever, staring at charts, hustling, doing whatever you have to do it, then do that. You'll gain the experience and stuff, right? And so that might be a phase in people's lives. Or maybe you don't want that, right? So everyone's got to decide for themselves. But I'll tell you, that's not sustainable. Maybe you can do it for a few years. Some people do it for their entire lifetime, and then they die early, right? They end up with health problems, and it doesn't usually work out if you extend it for your entire life. So if you go through a bout, then eventually you got to come back to reality and you got to balance things out. That's a part of the territory. So all of this, that's all a part of trading too. All right. Other questions? Do you look at total and total 2 charts where money flows? So like total market cap? Yes. I haven't looked at them in a while, but let's see. So it's been a while, so let's take a look at that. So it says total crypto market cap. So this is a monthly. We can see these monthly candles are starting to get larger. We can see the volume increasing. In fact, technically there's record-breaking volume on this breakout, right? So that's interesting. So there's certainly a lot of volume here too. I mean, you see how there's huge volume here on this parabola, and then there's huge volume on the breakout from the lower end of the spectrum, right? So that's one. And then there's the other one that's excluding Bitcoin. Okay, so this one's excluding Bitcoin. So let's see what altcoins are saying. And you can see that this is actually quite similar. So obviously a lot of this record-breaking volume also came from altcoins, steady increase, and it's also pushing up into a bit of a resistance area. Actually, what's interesting about the total markets when you look at altcoins is they are kind of testing prior support as resistance. So I would anticipate we might hit some resistance over in this area. If we break out, I imagine the next candle would be a lot bigger, probably be twice the size of this candle if we did break out. And if it were twice the size of that candle, to me that would be screaming, that month would be screaming to take some profit. If you ended up with some monthly candle looking like this, that would be a very strong profit-taking signal. So even though we're bumping up into resistance, and we could have a good retrace, maybe we even have to chop around a bit more. When I look at the overall, like individual markets, I still see things very much on the lower end of accumulation on the charts. So in my opinion, it still seems like there's some room to grow. I don't know if this this will be the resistance. It certainly can be. But because a lot of things on the other charts, on the individual charts, are nowhere near parabolic, even if we get shakeouts, even if things bleed out a bit more or chop around or go sideways or whatever, even if it takes this time, when I look at, general, let's look at Bitfinex. It's got a little bit more data. When I look at general, price structure, like let's say on the BTC charts, everything's still very much at the lower end of the spectrum. This would still look like the lower edge of, accumulation. You look at it on the USD charts, and it's certainly starting to pop up. But like, for example, this just broke out of this resistance. We don't know if it's going to stick or not. It might drop, but it just broke out. So chances are, if it does stick, it's going to go higher and the candles will get bigger, right? And this is still very, very much on the lower end. So if this under here was accumulation, then this would be like the first, major markup move to try to break up. And then if you look at other coins like Zcash or whatever, or Zcrash or Ztrash as people like to call it, it's at all-time lows on the BTC charts. It's at all-time lows on the USD charts. It's a little bit higher than the all-time lows, but it's still on the USD charts. It's still very much looks like an accumulation range. I don't even think it's really broken out of it yet. So even though we're at a resistance point, and even though we could chop around and get shakeouts, and who knows, maybe even go lower, anything's possible. If I were just to gauge things based on where we're at in the market structure and the charts, I would never look at a market that's flatlined here, basing out at support, as a market that's topping out. Like if I just looked at this, it wouldn't scream, oh, Zcash is topping out. It's market's screaming at me to take some profit now and hedge. Right? We're hitting some serious resistance here. If you've made life-changing amounts of money on Zcash right now, you better cash out. Otherwise, you're going to get wrecked. It doesn't mean we won't get shakeouts or won't chop around. But if you look at the price structure, I'm like, well, buy low, sell high. It's still very much at the lower end of the spectrum. But when you see it, and then compare it to any other point at a reversal on the bull trend, you just see these like ridiculous candles, right? Where like all of a sudden the market's like, oh, we're just gonna go flying, right? Really, really fast. And you just get these massive candles and huge volatility. This is all compressed with a lot of inertia. This is like momentum and extreme counterforce. And so it's just, it almost feels like Zcash is, more down here. And it's only when I start to kind of see stuff looking like this that I think, all right, it's time to start cashing in the chips, right? As from a trend writing perspective. Now that doesn't mean just because everything is compressed and on the lower end of the spectrum and chopping around sideways, it doesn't guarantee anything. It doesn't guarantee that we're going to make money in that. It doesn't guarantee that it's going to go up. It doesn't guarantee that it can't go lower or whatever. So you always still have to embrace the uncertainty, right? We don't know, but we're also playing with probabilities. When you calculate probabilities, this is not absolute. If I said it was an 80% chance that it's going to turn bull and we're at the bottom, there's still a 20% chance that it might flop, right? Just like if I take profit up here or up here and I think, yeah, I think there's an 80% chance this is going to, fall to crap or whatever. That's not guaranteed. I'm not certain of that, but, probabilities in my favor. So this is certainly interesting. It's certainly interesting to see the volume coming in, the size of these candles getting larger. Maybe we need a little retrace here at resistance and some consolidation before another push up. But if we were to even look at like Heikin Ashi, right? So if you were to measure this entire bull trend all the way from October of 2015 on the monthly, guess what? You haven't had a single 1 month red candle, right? And the Heikin Ashi, just calculating averages, mid-range averages, not a single red. So like this is why I sometimes look at the Heikin Ashi candles, because it can give you another perspective on if you're still in a bull trend or not, right? So, and then look, this entire bear trend, there was only one green candle, right? Because this was still, even though this is a warning, this was a warning sign to get out, this massive candle, but it was still green, right? Obviously prices are still going up. But then aside from this little pause here, which was that epic dead cat that we traded, it was all red, red, right? And let's look at it without Bitcoin. And very similar. I think looks like there's only one tiny little red candle here in November 16, and that was probably after the crash, when Bitcoin crashed to $300 after going parabolic. It's all green. Let's just see. Let's just kind of look at this from the other reversal, right? So it's interesting. So you have, obviously we had a little alt season here. I think Litecoin went nuts in this July. Yeah, Litecoin was going nuts. So it pulled a lot of this up. So it could be something like this, where it bleeds out, a big spike, but then a retrace, a little bit of red, but then you get consistent green. The candles get bigger, but it's all scale. So look how big this candle is. Like, oh wow, that's massive. These are monster candles, and you got one red one, and then every single other one is green. But then they get bigger, right? Just like I was talking about, scale. Then they get bigger. Like, look at the size of this bloody candle. It's not bloody. This growth candle. I mean, look at that compared to everything else, right? And then you think that's a big candle, and let's just scale out. Let's just scale some more. Oh, wow, that monster candle that now that looks like nothing. Now you've got candles that are even bigger than that, right? And then we think, okay, whoa, look at this one. This candle's just insane. I can't believe it's not butter. And then you scale out some more, and it's like, oh, wow, that was just a little crappy candle, right? So the current candle sizes compared to the rest, I would say, is similar to this one right here, right? Obviously, the market's at a different phase. The price dollar movements are a lot bigger. So it looks like something like this. The monthly candles can certainly get a lot bigger, even though there is a bit of a resistance here. So we'll have to see how that plays out. But I'm willing to keep my chips on the table and be patient to see how this plays out. I'm certainly, after going, and here's the thing, right? This is there's another reason why I'm extremely patient with a lot of my bags is, you go through a bear trend and you wait so long to get back closer to an accumulation range to find a bottom or whatnot to get to start another cycle. That these cycles don't happen every day. They don't happen every month or every year. They're like multi-year cycles. So like when I feel like we're getting at a point on the chart where we're about to start a new multi-year cycle, I'm not really in a rush to sell my bags. That's just me, right? Because it's like, man, the level of patience required just to get to that damn point, right? Sitting in mostly fiat for a lot of 2018 and being all concerned about all this crap, and then you finally get to a point where things are low enough that they look like it could be an accumulation, and then you're like, well, if this is a reversal and we do turn into a multi-year bull trend, then guess what? Things could go up a lot higher, even with shakeouts and stuff. So we'll have to see, right? Again, there's no guarantees, but even though I entertain both sides of the market, and never speak in absolutes. Oftentimes my actions speak louder than words. I put, I might say this or that, but I put my chips on the table. I bet my money on the table, right? I bet with my actions, even though I have no absolutes or guarantees as to what the results will be. Could I take a look at Solve? It's knocking at the all-time high in USD and volume is at its highest level. All right, that's just do a quick, and then we'll try to wrap it up because we're going on over 2 hours. Okay, so Solve, is there, guess there's not, doesn't look like there's any USD charts available that I can just grab. This certainly does look like it's on the lower end of the spectrum compared to this monster candle. So I love about zooming out. We can look at this and we can get so stuck in the staring at the trees, and then you zoom out and you see the forest and you're like, oh, what candle are we at down here? This, you measure the percentage moves and say, oh, holy crap, that would be like a 66% drop. But then you scale out and it just looks like a smashed up line. It's all just really crunched up, right? Very, very tight. It looks flat when you zoom out because you compare it to these ridiculous, this is just ridiculous, right? So if there's anything that you can learn about all this, whether you nail exact tops or bottoms or whatever, doesn't matter. All that matters is, especially in altcoins, when shit looks dead and it's flat and it's in the gutter and everyone hates it, that's fitting the buy low principle. And when you get these ridiculous monster-sized candles that come out of nowhere, like if you look at a candle, this is the difference between a new trader who's completely new to crypto versus someone who's been around the block a few times. A new trader will look at this massive green candle like, holy crap, this is the most bullish thing ever. I need to buy this. I need to FOMO into this. This is going to the moon. I'm going to get rich off of this. It went up 2,000%. And then a seasoned trader, the only FOMO that a seasoned trader would be doing is rushing their coins to the exchange so they can sell before this damn candle crashes. Right? And then the opposite. Right? Then the average new trader comes along, they look at this like, oh, it's dead, Bitcoin's dead, oh, it's a bunch of crap, meh, I'm gonna sell my bags, this isn't going anywhere. And and then a veteran trader look at this and be like, ooh, this I look at this coin and it's nice. This is like a 99% drop. It's basing out. I think I'm going to buy some of that, right? I might buy some. So anyways, I'm not going to buy some. I'm just saying in general, right? When you look at a chart. Now, what's that market cap and volume? Volume's all right. Market cap, mid cap. It'll probably have its moment of sunshine if this continues. Obviously, it is testing. Okay, so this is interesting. What month was this? Why are we not? There's something missing here. We're missing some data. CoinMarketCap's missing some data because it's not showing this. If that's even accurate. Anyways, it doesn't really matter. So yeah, according to this, it looks like it possibly breaking all-time highs. Looks like there's some consolidation. To me, just by eyeballing this at resistance, whenever I see a big consolidation pattern at resistance, oftentimes it means it could build up pressure for a breakout. It doesn't guarantee that there's a breakout. So what one can do is that when you have the breakout, confirm breakout after that consolidation, and you can pull the trigger. And then you've got a place where you can set your stops and stuff, and Chris shows all of that. So that would be the way to trade that. That would be a breakout play. And so you'd have to use the same rules. Breakout plays can be dangerous because you might buy a top if it flops. So you got to have your stop, right? You got to use the right tools for the trade. You know, you don't average down on a breakout trade, right? You average down on an accumulation or a dip buy, but on a breakout, you got to set your stops, right? To cut out, because if it's a top, then you don't want to be in it. You don't want to buy the top and bag hold, right? Overtrade in 2018 would like to know how you plan your trades and if you set minimum max limits. Minimum max limits. So obviously my trading style and my goals have changed and shifted a lot. So I kind of consider myself more of a position trader now, which is like, 6 months to 2 years type of thing. And I kind of consider myself like a cyclical trader right now, cycle to cycle. Maybe I might take a few trades in between now and again if an opportunity screams at me and says, hey, there's some free money on the table. If you don't take this, you're walking away from free money. If I see setups like that, I'll probably take them. For the most part, though, I'm more a cycle to cycle. So I'm not quite. So Chris is still trading, swing trading, usually pivot to pivot, stuff like that. So he's doing a lot more of that, especially now that there's some momentum back in the markets. He's definitely a momentum trader. But so obviously over trading is one of the problems there, right? And how do I plan my trades? Well, that all depends on the type of trade, right? Like Chris just gave an example on how he plans a breakout, and you can see many of his examples. So like, for example, if I was going to take this as a breakout trade, let's just pick something a little cleaner. Let's just go back to Ethereum. If you're going to do a breakout trade, then, let's say Ethereum's breaking out here, just like Chris showed. He took the breakout here and set his stop under the low, right? So if he got stopped out, that would be his max risk. And then to plan that out, if he longed the breakout, he said just a little bit before it broke out, and his first target, I don't know where it was, maybe it was here. Let's say stop was here, then you'd be getting like a 3-to-1 risk to reward. One thing I also want to point out, one sec. Like I want to show you an example of what I think is a really crappy trade. I mean, each to their own. But you know how everyone's been counter trading CNBC? So a funny tweet here. Markets are popping off, making crazy moves, and they're still out here grinding it, trying to scrape 5% gains on a 1 to 1.5 risk to reward. So let's just analyze this here for a second. One sec. Okay. Let me just. Let's just. Okay, so 8225. Actually, wait a minute. I'm just going to put on my other screen so I can see the numbers. So obviously they're trading. I understand what they're doing because they're trading cash settled futures that aren't open 24/7, right? They're not open 24/7. So this is like more day trading, and they're not open on the weekend and stuff. So they're taking like smaller moves and day trading and selling into cash. But like, to me, this is not the way to trade crypto. Maybe it works in other markets, but that's why like they're so bad and everyone's on counter trading and they've got like very high fail rate in these because they're trying to treat this like whatever other markets they're trading, or maybe they're just counter trading themselves and laughing at everyone. I don't know. But so that would be like right there. And so they're saying 225 as a stop. So 225 right here, we'll just say approximately. And then 7550. So this is like a 1.5 like risk to reward. And they have a 68% fail rate. Like, look at this. Like he just got stopped out, right? He just got stopped out. And like the thing is like if you really believe this is a top and it's going to top out and you're shorting, what the hell are you doing setting 5% targets, right? If you really think it's going to top out and that the bull trend's running out of steam, at least make your target 20% or something, unless you're just scalping for the day. But scalping for the day is a little bit more intuitive. Like you can just track the charts around and play around, and when you see a bounce, you can buy the bounce and then cut out when it, like you can kind of like arbitrage scalp a little bit, we talk about. But like the stops are so ridiculously small and the targets are so small that in my opinion, that's like a really stupid way to trade crypto. Doesn't make any sense. I was trying to understand the logic of that trade myself. Anyways, each to their own. I don't want to criticize other traders or whatever, but I just don't understand it. So, and they, anyways, whatever. So that to me, in my opinion, is a way like not to trade the crypto markets. I mean, trading like that is like you have, the crypto markets are popping off doubles and triples. You have this, you're at a buffet. There's all this food you can eat. You can trend ride and whatever, and you've got all this food, this buffet, and you're out here in the corner, like sitting on the floor, eating your chocolate bar or something like that, right? You're eating like peanut crumbs off the floor or something. Like I don't get it. Like, what are you doing? There's crazy stuff happening. Like all these traders had to do is buy some Bitcoin and just hold it for a bit, and they would have outperformed all of this bullshit work they're trying to do for 5% gains every day. Just one stupid trade and just buying a little bit of Bitcoin a bit earlier, just holding it. And if they just even sold it now, even if it's not the top or whatever, that one trade would outperform like, 50 of these paper cut trades they're trying to make that they're constantly getting. Anyways, I don't want to, who knows? Maybe it's like a psyop and they're counter trading themselves and they're using themselves as a counter indicator, so they have to keep making money off their own silly trades. Or maybe it's just marketing, or I don't really get the logic. I would love to sit with one of these traders and kind of pick their brain and hear them out and hear what the theory is on all of this. But, if I was a CNBC trader, I'd be like a troll, right? I'd give these really stupid trades and then I'd counter trade myself and keep making money. I don't know. Who knows, right? Maybe it's a big psyop, right? Anyways, whatever. All right, we're going to end it there. That's 2 hours and 22 minutes, folks. So I hope this is amusing. I hope everyone's having fun in this crypto market. Try not to FOMO too hard. Right? If you miss out on something, just remind yourself there's always another dip, right? Like, is Bitcoin just going to go up in a straight line without a correction? Well, it certainly did here, but, we paid for that. And in my opinion, I would much prefer to have a slow, healthy bull trend that lasts over the next few years than to just have the market shoot up and break the all-time highs. Because we start doing that, we start shooting up and just breaking the all-time highs really fast and going parabolic, which I think is extremely unlikely. But if we did something stupid like that, suddenly we're just back at square one, right? That's not sustainable, right? So healthy bull market means we'll have 30 to 40% corrections. We'll have long periods of consolidation. Then we'll keep breaking at each level up. And then the periods of consolidation will keep getting shorter and shorter and shorter. And we pointed this out. We pointed this out on the parabola. We did a huge analysis on it in the parabola, how the time frames just keep shortening between consolidation periods, right before it breaks all-time highs. She just gets shorter and shorter. right? Accelerated, accelerate, whatever. And then it gets a little bit longer. Now we're in new price discovery, so it gets a bit longer again. Right? But you can kind of just see that these periods just keep getting shorter. And then next thing you know, it's gone from like having to wait months to weeks to days before you keep breaking new highs and so on and so forth, right? So that's so I anticipate that whenever we do hit resistance, it really wouldn't surprise me if we had a massive consolidation pattern until the end of the year or until like 2020, right? When we do top out, that wouldn't surprise me. So we'll see, right? You got to adapt, entertain multiple scenarios like a chess player, just like Chris says. All right, folks, take care. I hope everyone has a great weekend, and let's see what next week brings us. Let's see what kind of mayhem next week brings us. Some people might be happy to get a big dip if we get one. Other people might be happy if we break up and hit 10K. So let's see what happens, folks. All right, take care. Cheers.